Hey guys, today I want to talk about how segment rates impact your Chevron pension. My name is Stephen Chambers and I'm a senior wealth manager at Willis Johnson and Associates. So if you started at Chevron prior to 2008, your lump sum pension amount has an inverse relationship with interest rates. Interest rates up, lump sum down, and vice versa. So the key question here to ask ourselves is where are interest rates today and where are they going? Well, on August 2nd, unemployment rate came out 26% higher than what it was in July at 4.3%, sparking the SOM rule, causing chaos in the markets, amongst other things. But what that tells us is that we are either entering into a recession or we're in a recession. And that has key implications for where interest rates are going. So because of that data point, the market, traders specifically, are pricing in rate cuts starting as early as September of 2024. As you can see from this probability chart, the current rates are at 5.25 and 5.5, and there's a 57% chance the Fed cuts by 50 basis points, and there's a 42% chance that it's a 25 basis point cut. So what's uncertain is the magnitude of the cut, but what is certain is that there's a 100% probability as of today that the Fed will cut rates. Keep in mind, September 8th, jobless claims came out more favorable than expected. So the magnitude of the cut, the probability changed. So the key takeaway is rates are most likely going to happen, but the magnitude is still unknown. In November, same thing. There is a variety of probabilities of where rates will be. This changes, but the markets are pricing in rate cuts in November as well. And as you look at the top left-hand side of this table, these are the other Fed meetings, which could potentially mean further rate cuts. So just keep that in mind, right? And if you've been following these videos, in our last video, I went into more detail on how as a Chevron employee, you can log into Benefit Connect and model the impact your pension lump sum has on the falling rates. So in this example, we illustrated a 3% rate cut, which resulted in the 1.5 lump sum jumping to 2.1, which is essentially a $600,000 increase, which means a 1% drop in rates has a corresponding $200,000 increase in your lump sum, which obviously is significant, and which is why it's important to watch this stuff. Lastly, guys, if the Fed starts cutting rates, it's because we're in a recession, and recession could mean job losses. It could mean severances, right? And the key thing to note that is if you are severed or decide to retire, you don't have to immediately take your pension. In fact, we're generally suggesting not to. And the reason that is because for a variety of reasons, if you don't need it, don't take it. And also this Chevron blended 3-month look back. This is not talked about a lot, but keep in mind this is important. So for example, let's say you decide to leave Chevron in February 2025. Chevron will then look back at September, October, and November at what the interest rates were then and blend them which then impacts your lump sum. So if you remember back to the chart I showed earlier, there's going to be meetings, the Fed meetings between November and February. And if in those meetings the rates drop significantly, that rate cut will not be factored into your pension lump sum. So the key point is, this is complicated. There's a lot of moving pieces. There's a lot of unknowns. All this is essentially very much data dependent, but this is a huge benefit. And we want to make sure that you are tracking this stuff and you're not leaving money on the table, essentially. If you appreciate this content, please like and subscribe for more educational Chevron content. Thanks for watching.